In today's video, we'll be going over the ICT silver bullet. My name is Wendell from Spektrades. If you guys are new here, make sure you guys subscribe down below for more content. Without further ado, let's get right into this video. The ICT silver bullet window refers to a specific 1 hour interval during which a particular trading pattern forms and aggressive moves occur. This pattern is linked to a specific time frame and can be found every single day. As you can see here, this is the silver bullet time window. It's from 3 a.m. to 4 a.m. EST, 7 a.m. to 8:30 a.m. EST, 10 a.m. to 11 a.m. EST, 2 p.m. to 3 p.m. EST, and 3 p.m. to 4 p.m. EST. All the times are in EST New York time. The ICT silver bullet window is only a 1 hour trading interval, so this right here happens every single day. And if you guys missed this first one, there's so much of them. It happens over and over again. As we can see right here, price rallied higher and give us a liquidity sweep of this old high, then push down lower to give us this market structure shift. This right here is a London silver bullet. So from 3 a.m. to 4 a.m., just like you see right here in this between this time window right here, price pulled back after giving us this market structure shift to mitigate this fair value gap. Price respected the 50% of this fair value gap, mitigated our order block, our stop loss above this old high, then price pushed down lower. This right here is our silver bullet. It's a pattern that forms and trades aggressively during a certain time window. Now for the liquidity zones, the key levels for the silver bullet. The type of liquidities that we target and we look for. So we target or look for previous trading session highs and lows. The reason we target the highs and the lows from the prior trading session is that these often act as key levels for market reversals or breakouts. Another one that we use is the previous week high or low. As you can see, the high and the low from these previous weeks are significant liquidity zones often used by institutional traders for stop hunts or market engagement. Another one we use is the previous day high and previous day lows. These focus on the high and the low of the previous day, as these key levels represent immediate support and resistance with high potential for liquidity accumulation. For our conclusion is that targeting liquidity from key price levels such as the previous session, previous weeks, and previous days highs and lows give the traders edge in identifying areas where institutional players are likely to act. As you can see in this schematic right here, price was pushing down in this downtrend right here and leaving these key liquidity levels. This was our previous day low. So we see that price push down lower to clear this previous day low, then went higher and give us a liquidity sweep of this old high right here, and also a market structure shift, changing the direction. So price push down lower, give us a liquidity sweep of this previous day low to then push up higher to give us a market structure shift of this old high. And after this right here, we can see that price will give us a slight pullback to then start giving us higher time frame movement to target previous session highs or previous week's highs right here. As you can see, this is our double tops right here. This is another point of liquidity. So for the silver bullet, we're just going to be targeting previous session highs, previous week highs, or previous day highs. It only lasts about 1 hour, so we never hold these trades for long-term trades. These trades right here is a short-term day trade. That's for the silver bullet. It's a short-term 1 hour day trade strategy. Now for achieving success with the silver bullet strategy, for the targets that we use for forex pairs is to target 15 pips minimum, right? That's for forex pairs. For indices, like me, I trade NAS 100, you can either target 10 points or 40 ticks minimum. That's really the rules right there, either 10 points or 40 ticks minimum. The entry model right here is our entry model. Make sure you guys are taking notes or writing all of this down, because you guys will need this right here when you go on the charts to execute this strategy. For our entry model is to identify untapped liquidity pools. Look for areas with pending orders that haven't been engaged yet, usually near highs or lows or consolidation zones. Spot the fair value gap. Find a gap in price action opposite to the target liquidity pool. And then number 3 is to anticipate market movements. Wait for price to move toward the liquidity pool during the silver bullet time window. The key session opens or closes. And then some key notes is to confirm price fills the fair value gap before entering. Only risk between 1 to 2% per trade. If you are a super beginner trader, I would only advise you to risk 0.25 or 0.5% to build that confidence, and over time you can increase your risk. As you can see in this schematic right here, price push down lower and give us a liquidity sweep of this previous old low, and this was our old high right here. And after this old high right here, we are looking for price to give us a firm body breakup structure of this old high. Then we can see that price push up higher, did not give us that firm body breakup structure. Price rallied higher again, but we did not get it. it was right here, this candlestick right here, this bullish candlestick. This gives us this firm body breakup structure. And what did it leave? It left this fair value gap. Just like we stated, we are looking to spot a fair value gap. That is the main entry for our silver bullet. And we're looking for it between this time window, 10 a.m. to 11 a.m. This right here was a 10 a.m. to 11 a.m. New York session silver bullet. So from 10 a.m., as you can see, price pushed down lower, mitigated our 50% and respected it to then rally higher to push up to go and clear buy side liquidity on opposing sides. So all we're looking for is for a liquidity sweep to happen, then for price to go higher and give us a breakup structure of the highs that did the liquidity sweep, and for price to leave a fair value gap. Then we're waiting for the time window. We can only take the silver bullet in the time window. So if we see this happen way earlier, if the setups look clean, that may work also. But for the silver bullet strategy, the momentum, that's what we're looking for right here. The momentum, the aggressive momentum. That's why the silver bullet works, because between 10 a.m. to 11 a.m., that's when a lot of volatile movements happen in the markets. And then we can see that price will pull back, mitigate our fair value gap to then push up higher to clear our old opposite liquidity. Now let's go on the charts and see a silver bullet trade live in action. If you're interested in a free Discord where me and my brother 𝗥𝗲𝗀 share daily analysis and have a free sport course where we share trading lessons and trading studies in models, and we also have trading resources like ebooks, our Spark journal, and PDFs of every video that we have. And as you can see right here, traders inside of the Spark Trading U community catching trades with the premium and discount model. As you can see right here, catching this much amount of pips with our premium and discount model. If you guys are interested in joining the Spark Trading community, it is free. Click the first link down below in the description and join the Spark Trading community. Now that we're on the charts, we mainly want to see the silver bullet happen on one key time frame. That key time frame is the 15 minutes time frame. That's the time frames we usually love to see the silver bullet happen. As you can see right here, price came down from this old low right here and then started rallying higher, giving us consistent breakup structures of prior old highs until we reach this old high right here. We see that price pushed up higher to give us this liquidity sweep. Then price was supposed to push down lower to continue this bullish uptrend. But we see that price violated this old low right here. Even though we did not get that firm body breakup structure here, like we stated, price pulled back to mitigate this order block right here. Now we have this firm body breakup structure. Just like I stated, we always wait for this firm body breakup structure to happen. Now we can see that this is a 1 a.m. to 2 a.m. silver bullet. This is the time frames between 1 a.m. to 2 a.m. So next, all we're looking for is a fair value gap that forms. As you can see, this is our fair value gap. We're just gonna grab it right here. And me personally, I usually wait to price taps inside of the 50% of the fair value gap. I place my entry right at that 50% of the fair value gap and my stop loss right at the old highs right here. Now let's play price and see exactly what happened. Now as we can see, price taps inside of our fair value gap. Now we see that price mitigated our fair value gap fully. Now let's see if we can get a wick rejection from this fair value gap to push price lower. Boom. Now we see that price wick from this fair value gap and now push price lower. Now let's see if we can get a full body violation of this old low right here. Perfect. And this is how the silver bullet moves. The silver bullet happens every single day between this 1 hour window. If you're a person that is patient enough and can wait patiently for this 1 hour window, you will see some extreme volatile movement and catch beautiful trades. I hope you guys enjoyed this video right here and was able to get a lot of value. If you guys want the full PDF access to this video, make sure you check out the first link down below where you get access to the full PDF of this lesson and also a free course, and join a free community where me and my brother 𝗥𝗲𝗀 send daily analysis. Well, this is it. If you guys enjoyed this video, make sure to like, subscribe, and comment down below what you think. Spektrades out.